Today, we are exploring the dramatic and honestly mind-blowing rise of SK Hynix. This is the story of how a debt-ridden underdog became the absolutely indispensable backbone of the artificial intelligence revolution. It is a total masterclass in relentless engineering, massive risk-taking, and having some seriously long-term vision. Imagine the global artificial intelligence boom as a massive, high-speed freight train. Now ask yourself, what happens if you pull just one crucial pin right out of the tracks? Well, without one specific company, the entire physical AI revolution simply grinds to a halt. The world's most advanced language models and AI factories would be completely starved of the data they desperately need to function. Let's see how this all builds together along the supply chain. The AI hardware ecosystem is built on a continuous but pretty fragile chain. First, you have ASML providing the extreme ultraviolet lithography machines. Then TSMC uses those incredibly complex machines to manufacture the logic chips. Next, SK Hynix provides the ultra-fast memory that sits right next to the logic. Finally, NVIDIA packages it all together into the GPUs that power the massive data centers. If you pull SK Hynix out of step 3, the world's most powerful AI accelerators literally cannot be built. But this incredibly dominant position in the supply chain was never guaranteed. In fact, the history of this company is a super dramatic narrative of immense risk and near total collapse. To really grasp their current absolute dominance, we have to look back at their incredibly messy beginnings, because they certainly were not always the shining star of the semiconductor world. The company actually started back in 1983 under a completely different name. They were founded as Hyundai Electronics Industries, which was just one part of a massive industrial conglomerate. Initially, they were just acting as an original equipment manufacturer, basically producing chips for foreign firms. They were essentially paying a really steep premium just to climb the semiconductor learning curve from scratch. Then came the absolutely devastating 1997 Asian financial crisis. The entire South Korean economy was thrown into complete chaos, and highly leveraged companies were suddenly fighting for their lives. Hyundai Electronics was drowning in heavy debt and facing intense pressure from the government to restructure. Survival meant making some really drastic, forced changes just to keep the factory lights on. In 1999, things got so bad they were forced into a massive merger with LG Semiconductor. By 2001, the company was spun off and officially rebranded as Hynix Semiconductor. However, they were effectively bankrupt at this point and handed right over to a consortium of creditor banks. The visionary founders were gone, and suddenly, bankers were the ones calling the shots on complex technology roadmaps. These were truly the wilderness years for Hynix. When traditional banks run a bleeding-edge technology company, their primary goal is debt recovery, not innovation. Research and development budgets were tightly constrained, which is basically a death sentence in tech. They were forced to compete against well-funded global giants while fighting with one arm tied behind their back. But everything completely changed in 2012 with a massive corporate rescue. SK Group, which is this huge telecom and energy conglomerate, stepped in and acquired a controlling stake. They injected some desperately needed capital and integrated the company into their wider, highly successful ecosystem. Hynix officially became SK Hynix, and a brand new era of aggressive expansion finally began. At the very time of the acquisition, the global memory market was actually in a deep, painful recession. Most competitors were slashing their capital expenditure drastically just to survive the downturn. Instead, SK Group authorized a massive, entirely counter-cyclical investment campaign. They basically poured unprecedented resources into research and development right when everyone else was retreating. So this brings up a really fascinating question about corporate culture. How exactly did a company that was basically on life support become the absolute top choice for fresh engineering graduates? Well, we're going to answer that fully by the end of our journey today, but as a quick hint, their engineers are now heavily rewarded for pioneering some incredible technological breakthroughs. And this brilliantly illustrates the core strategic difference between SK Hynix and its biggest rival. Samsung is a sprawling conglomerate that makes logic chips, smartphones, televisions, and even home appliances. SK Hynix, on the other hand, is a pure-play memory company. Every single ounce of their engineering talent is focused purely on pushing the boundaries of memory architecture. This zero-distraction strategy means their performance is entirely tied to memory cycles. When the memory market booms, their success isn't diluted by a sluggish smartphone division or struggling home appliance sales. Every breakthrough in chip stacking lands directly on their bottom line. This absolute focus is exactly what allowed them to place a massive, highly specific bet on the future of computing. And that massive bet was a 10-year gamble on a radically different way to build memory chips. While the rest of the industry was totally obsessed with making flat chips cheaper, SK Hynix started looking upward. They realized that traditional memory architecture was eventually going to hit a hard physical limit, so they bravely decided to bet their entire future on 3D stacking technology. This incredible foresight led to the creation of high bandwidth memory, or HBM. Instead of laying memory chips side by side on a motherboard like a sprawling suburb, HBM stacks them vertically like a skyscraper. Microscopic holes called through-silicon vias are drilled straight through the chips to connect them all together. This creates a massive, ultra-fast multi-lane highway for data to travel at mind-bending speeds. This specific innovation was absolutely necessary to bypass what engineers call the memory wall. You can build the fastest processor in the world, but if it has to wait around for data to arrive from slow memory, the whole system chokes. Artificial intelligence models require moving astronomical amounts of data all at the exact same time. Standard memory simply could not keep up with the extreme demands of advanced computing. When you actually compare the two architectures side by side, the difference is just staggering. Flat DRAM operates on a two-dimensional layout, which is perfectly fine for your laptop or basic servers. However, it completely bottlenecks when you are trying to train a massive large language model. 3D HBM provides the vertical stacking and insane bandwidth required to constantly feed data-hungry AI accelerators. But here's a really vivid anecdote about HBM's origins that is quite surprising. SK Hynix actually co-developed the very first HBM chip with AMD way back in 2013. It was originally targeted at high-end gaming graphics cards, not artificial intelligence. When those specific gaming cards underperformed in the market, early HBM was actually widely considered a complete commercial failure. This false start kicked off one of the absolute darkest periods for the internal HBM engineering team at SK Hynix. They had poured their souls into inventing this incredibly complex technology, but the market didn't seem to want it at all. To make matters worse, their biggest rival managed to temporarily seize the technological high ground. Samsung stepped right in and took the early lead in the next generation of the technology. In 2016, Samsung actually managed to win the early memory orders for NVIDIA's cutting-edge GPUs. Doubt really began to creep into the SK Hynix ranks because HBM wafers were incredibly difficult and expensive to produce. Then, in 2018, Samsung unexpectedly downsized its own HBM team, assuming the market for it would just remain small. Despite the industry leader stepping back, SK Hynix stubbornly refused to quit and kept quietly developing the next generation. This powerful quote perfectly captures the essence of their incredible hard-fought turnaround. The engineers simply believed, down to their core, that this architecture would eventually become essential for the future of computing. They pushed through the heavy skepticism and perfected the extremely difficult manufacturing process for HBM3. It was a massive victory driven entirely by a relentless engineering culture and unwavering long-term vision. That decade of stubborn, almost irrational faith eventually brought them right to the ultimate climax of our story. The technology world was completely blindsided by the sudden, explosive growth of generative artificial intelligence. Virtually overnight, every major technology company on Earth realized they needed to build massive AI data centers, and those data centers desperately required the exact memory technology SK Hynix had spent 10 lonely years perfecting. Now, what's really interesting about this slide is the sheer timing of it all. When ChatGPT launched in late 2022, it triggered an entirely unprecedented surge in orders for NVIDIA GPUs. Because competitors had previously pulled back on their HBM development, they were totally caught off guard. SK Hynix was quite literally the only supplier on the planet truly ready to scale up and meet NVIDIA's explosive demand. This intense early preparation forged an incredibly tight bond between SK Hynix and NVIDIA. NVIDIA now publicly relies on SK Hynix to keep the entire global AI supply chain moving. The two companies are deeply aligned, coordinating their hardware release schedules years in advance. This partnership has totally transformed SK Hynix from a simple parts supplier into a core platform partner. This dominant position translates to a truly commanding majority of the global market share in high bandwidth memory. They effectively cornered the absolute most lucrative and critical segment of the entire semiconductor industry. Competitors are now racing frantically to catch up and qualify their own chips, but SK Hynix maintains a firm grip on the steering wheel. They have secured a massive, almost insurmountable first-mover advantage in the AI infrastructure race. Holding such a massive portion of this market gives them absolutely incredible leverage. Every major tech giant building large language models has to basically wait in line for their memory chips because the manufacturing process is so uniquely difficult. The barriers to entry for new competitors are astronomically high. They have built a virtually impenetrable moat around their core AI business. So the crucial point here is the unbelievable profit margins they are generating from this market dominance. In the hardware manufacturing world, reaching profitability levels like this is almost totally unheard of. It proves the immense pricing power they currently hold over the entire tech industry in a heavily undersupplied market. When you are the only one who can deliver the exact part everyone desperately needs, you get to dictate the terms. This newly found pricing power completely changes the fundamental profile of the company. They are no longer subject to the brutal race-to-the-bottom pricing of standard commodity memory chips. Customers are more than willing to pay massive premiums just to ensure they have guaranteed access to future supply. It is a huge structural shift that provides unprecedented business stability for the next several years. While HBM gets all the flashy headlines, SK Hynix has actually been quietly expanding its moat in other crucial areas too. They realized early on that AI data centers also need massive amounts of highly efficient long-term storage. To perfectly address this, they executed a massive acquisition of Intel's NAND flash memory division. This bold strategic move immediately elevated their status in the enterprise storage market. This massive acquisition resulted in the creation of a brand new U.S. subsidiary named SolidGem. Through SolidGem, SK Hynix now offers incredibly dense, ultra-fast solid-state drives designed specifically for unstructured data. When AI systems need to access petabytes of training images and text, they pull it directly from these high-capacity drives. It is a brilliant complementary technology that allows them to capture even more value inside the data center. As we look to the future, SK Hynix is clearly transitioning far beyond just selling commodity components. They are structurally locking in their position for the next full decade of advanced computing. They are no longer just waiting for processor companies to design a chip and then simply asking what memory is needed. They are literally sitting at the architectural drafting table from day one. SK Hynix is now directly co-developing memory into the core design phase of NVIDIA's upcoming Vera Rubin AI supercomputers. Their memory roadmap is deeply integrated right into the blueprints of the world's most advanced AI factories. This means future AI accelerators are being specifically optimized for SK Hynix architecture before they are even built. It is a level of vendor lock-in and deep partnership that is incredibly rare in hardware manufacturing. And their ambitions are expanding far beyond just the massive cloud data centers. Through their deep NVIDIA partnership, they are bringing high-performance memory right into everyday computing. This includes highly specialized memory for advanced AI personal computers and local inference machines. They're even developing hardware to support the incredible next generation of autonomous robotic platforms. This really marks the dawn of what the industry is calling physical AI. Soon, incredibly complex artificial intelligence won't just live in the cloud. It will run locally on your phone, your PC, and autonomous machines. All of these edge devices will require incredibly fast, power-efficient memory to process data in real time. SK Hynix is just perfectly positioned to supply the foundational memory architecture for this next wave of the revolution. This incredible journey from the absolute brink of bankruptcy to dominating the AI hardware space is truly unprecedented. They proved that relentless engineering and a stubborn refusal to quit can quite literally reshape the global economy. But the semiconductor industry is notoriously brutal, and their rivals are right now pouring fortunes into catching up. So, as artificial intelligence becomes embedded in every single device on Earth, will SK Hynix maintain their incredible moat, or is another massive industry shakeup already on the horizon? Right now, the global hardware manufacturing industry is experiencing a financial anomaly that completely defies historical precedent. We are looking at a hardware company that is suddenly producing profit margins typically reserved for elite software monopolies. It is a phenomenon that forces us to fundamentally reevaluate exactly how we price capital-intensive technology companies. 72%. Now, that is not the operating margin of an enterprise software provider. That is SK Hynix's reported operating margin for the first quarter of 2026. To put that into perspective, achieving a 72% margin in the notoriously capital-intensive, cutthroat semiconductor fabrication business is almost mathematically incomprehensible. And this incredible profitability has profoundly restructured the Asian equity markets. Back in June 2026, SK Hynix saw its market capitalization surge to approximately $1.35 trillion. This momentous rally allowed it to briefly bypass Samsung's ordinary shares, crowning it South Korea's most valuable listed company. For a business that was essentially a penny stock, trading at just 125 Korean won in 2001, kept alive only by creditor bailouts, the transformation is absolutely absolute. The sheer velocity of this financial acceleration becomes crystal clear when we contrast their record-breaking full year 2025 with just the first 3 months of 2026. In the first quarter of 2026 alone, they generated 52.6 trillion won in revenue and a massive 37.6 trillion won in operating profit. We are talking about a staggering 198% year-over-year revenue growth, and they achieved that in just a single quarter. In fact, their standalone net profit for those 3 months is roughly comparable to their entire net profit for the entirety of 2025. So, what is the catalyst driving these astronomical numbers? It all comes down to a fundamental architectural shift toward high bandwidth memory, or HBM. Historically, dynamic random access memory was treated as a highly cyclical, commoditized component that was constantly subject to brutal price wars. But the explosion of large language models has severely exacerbated the bottleneck between compute speed and memory bandwidth. Virtually overnight, HBM evolved from a commoditized chip into a custom, highly engineered infrastructure component that is tightly integrated with AI processors. And in this new, highly lucrative segment, SK Hynix has built an absolutely massive competitive moat. They currently hold over 57% of the global HBM market share. That leaves their primary competitors, Samsung and Micron, trailing significantly at just 21% each. This extreme concentration of market power gives SK Hynix extraordinary pricing leverage in a market that is deeply undersupplied. SK Group Chairman Choi Tae-won actually hit the nail on the head regarding this strategic shift. He noted that if SK Hynix's memory is replaced, the entire AI system might just fail to function altogether. As he put it, what used to be a peripheral component has become a core component. Modern AI supercomputers literally will not operate without these specific, highly engineered memory integrations, which fundamentally alters the supplier-customer power dynamic. But here is the really interesting part. This market dominance is permanently locked in through a multi-year structural alignment with NVIDIA. We are not just talking about a standard procurement contract here. SK Hynix is actively co-developing next-generation memory for the Vera Rubin AI supercomputing platform, Vera CPUs, RTX Spark pieces, and even Jetson Thor robotics. By integrating their memory directly into the design phase of NVIDIA's platforms, they secure an unprecedented level of earnings visibility. And this locked-in supply agreement is backed by serious, tangible operational advantages that competitors are really struggling to replicate. SK Hynix utilizes a proprietary advanced MRS/move packaging technology. This tech delivers superior thermal and power efficiency characteristics, and controlling heat is an absolute necessity for densely stacked chips in AI servers. Plus, the company is reporting remarkable 80% yields on their 1C DRAM process, which indicates a highly mature mass production capability that creates a formidable barrier to entry for anyone else. Yet when we actually look at the valuation, we run into a glaring financial paradox. Despite producing these monopoly-like margins, SK Hynix trades at a single-digit forward PE multiple, hovering somewhere between 7.4 and 9.2 times forward earnings. Meanwhile, Micron trades at around 25 times, and NVIDIA trades at over 40 times earnings. So the company supplying the absolute critical bottleneck breaker for the AI revolution is trading at a massive discount compared to its American peers. This valuation gap is a direct symptom of what financial markets commonly refer to as the Korea discount. Essentially, this is the historically lower valuation multiple applied to South Korean stocks. It is driven by complex domestic corporate governance structures and some pretty severe limitations placed on overseas institutional accessibility. Global capital desperately wants to own this asset, but structural market friction is preventing efficient price discovery. To bridge this valuation arbitrage, SK Hynix is executing an immediate and highly aggressive corporate action. They have officially filed to raise a historic $29.4 billion via an American Depositary Receipt, or ADR, listing on the NASDAQ. This is not just your standard capital raise. It is a deliberate structural mechanism designed specifically to force a valuation re-rating. The sheer scale of this move is unprecedented in the global semiconductor space. The actual mechanics of this listing are monumental. Trading under the ticker SKHY, the company plans to issue 17.79 million new shares. With 10 ADS representing one common share, the expected price sits at roughly $166 per ADS. At $29.4 billion, this offering is going to surpass both Alibaba and Saudi Aramco to become one of the largest market debuts in recorded financial history. Now, the true underlying purpose of this ADR issuance is democratizing liquidity from massive pools of Western capital. Think about it. Thousands of US-based mutual funds and passive ETFs are legally mandated to invest exclusively in US-listed securities. By placing these ADRs on the Nasdaq, SK Hynix suddenly opens its doors to trillions of dollars in passive and active American institutional capital. In fact, analysts are projecting this massive liquidity injection could drive the ADR prices to trade at a 20% premium over the sole listed shares. This listing also brilliantly clarifies the distinct strategic roles within the global memory oligopoly. SK Hynix has officially elevated itself from a simple component vendor to a deeply integrated AI infrastructure partner. Micron, on the other hand, positions itself as a secure supply, geographically diverse alternative, particularly for Western hyperscalers. Meanwhile, Samsung continues to operate primarily as an unmatched, scale-driven manufacturing powerhouse. However, before we start projecting infinite upside here, we have to confront the historical violence of the memory cycle. The semiconductor industry is notoriously prone to massive, stomach-turning boom and bust fluctuations. We saw a massive peak in 2018, followed by a steep decline in 2019, a brutal trough in 2023, and now this AI-driven supercycle peak of 2026. The million-dollar question is whether AI demand has permanently smoothed out this curve, or if we are simply scaling an even steeper cliff right now. The raw financial data illustrates this cyclical vulnerability perfectly. Back in 2021, the company posted a very healthy net income of 9.6 trillion won, but just 2 years later, in 2023, a severe supply glut caused SK Hynix to suffer a devastating 9.1 trillion won net loss. While they absolutely roared back in 2024 to a 19.8 trillion won profit, this history proves that memory balance sheets remain incredibly sensitive to macroeconomic oversupply. Entering the US capital markets also significantly heightens the company's exposure to geopolitical risks. We cannot forget that SK Hynix maintains critical manufacturing hubs in Wuxi and Dalian, China. By listing on the Nasdaq, the company places itself firmly within the jurisdiction of increasingly strict US export controls that are targeting advanced semiconductor manufacturing in Chinese territories. Navigating these regulatory crosshairs is going to require some extraordinary diplomatic and operational agility going forward. Simultaneously, the competitive threat from Samsung is intensifying at a rapid pace. Samsung is certainly not sitting idle while all this happens. They successfully began mass-producing HBM4 in February 2026. Furthermore, AMD just designated Samsung as the primary supplier for their next-generation AI chips. This is a highly aggressive counteroffensive, specifically designed to disrupt SK Hynix's exclusivity and claw back some of that high-margin market share. Beyond the HBM wars, SK Hynix is also managing some immense internal integration risks. The company previously committed $9 billion to acquire Intel's NAND business, which now operates as SolidGem, in order to scale their enterprise SSD capacity. While this was absolutely necessary for vertical integration, it requires incredibly heavy capital expenditures. Operating a sprawling, multi-technology global footprint like this adds layers of operational friction that can easily drag down overall margins if it is not executed flawlessly. If we zoom out to a macroeconomic scale for a moment, the capacity requirements here are severely straining national resources. South Korea is essentially betting its entire economic future on semiconductors, with an unprecedented 4,800 trillion won national investment blueprint. The sheer scale of this expansion puts very realistic physical strain on domestic water and electricity infrastructure. You simply cannot manufacture the future of artificial intelligence without massive, uninterrupted power grids to support it. To hedge against some of these hardware risks, SK Hynix has secured a highly surprising strategic software asset. The company holds a $500 million stake in Anthropic, which is one of the world's leading AI software labs. This is a brilliant maneuver. It provides SK Hynix with direct, inside visibility into the specific software demands that will ultimately dictate their future hardware requirements. It effectively connects the foundational silicon layer directly to the frontier model layer. Looking immediately ahead, 2026 represents a highly critical technological transition phase for the business. Right now, HBM3E is operating as the golden standard and serves as the primary revenue engine for the company. But simultaneously, massive research and development resources are actively shifting toward the mass production of HBM4. Managing this complex dual-generation supply chain without cannibalizing their yields is going to be their paramount operational challenge for the next 12 months. And this is exactly where that $29.4 billion in NASDAQ capital will be deployed. The proceeds are already earmarked for the massive expansion of their Yongin megafab in South Korea. Crucially, though, capital will also flow into a $4.75 billion advanced packaging facility in Indiana, which is supported by U.S. CHIPS Act funding. This geographical diversification of their supply chains is a direct requirement from hyperscalers who are desperately looking to mitigate Asian geopolitical risks. Which brings us to the ultimate question facing institutional investors today. Is this structural shift to AI memory, backed by locked-in partnerships and those crazy monopoly-like margins, truly deep enough to conquer the historical boom-and-bust nature of semiconductors? The upcoming NASDAQ listing is going to force the open market to answer this question in real time. Because as an investor, you now have to weigh the monumental valuation upside of the AI supercycle against the unforgiving historical realities of hardware manufacturing.